Good morning, evening, or night, wherever you are. Welcome to WHAM today. Take a deep breath, clear your mind, and let's drift through the whispers of today's world, one quiet thought at a time. As we wrap up Friday, 25th April, 2025, let's see what stories are unfolding around us. China denies engaging in trade talks with the US, dismissing related claims as fake news and demanding the removal of all unilateral tariffs imposed by the US. Chinese manufacturers are using TikTok to sell luxury goods directly to US consumers, circumventing tariffs. Some companies are raising prices in the US and shifting production to Vietnam to mitigate tariff pressures. China is relaxing restrictions to allow greater access for overseas investors across various sectors and issuing more ultra-long-term government bonds to bolster its economy. China is also turning to the Middle East for LPG and has cancelled pork shipments after tariffs raised prices. Intel is partnering with AI firm Model Best and chip designer Black Sesame on smart car systems to meet demand in China's EV market. Turning to the United States, President Trump's administration has considered slashing China tariffs after hinting at de-escalation. Trump aims to combat China's control of minerals by investing in miners, highlighting China's practice of dumping critical minerals. A U.S. Select Committee subpoenaed China's telecom giants, investigating their alleged support for the Chinese military and government. Tariffs on China are unlikely to rescue the U.S. medical gear industry. Asia-Pacific markets have shown mixed reactions to the U.S.-China trade developments, with South Korea's GDP contracting 0.1% in Q1 2025. Meanwhile, an exclusive China track bank netting system shields Russia-China trade from Western scrutiny. The government is outlining a reform agenda to China and Saudi Arabia. China's investments in Southeast Asia are complicating US plans on supply chains. Foreign automaker sales in China are declining, even for brands like Porsche. China Boki Environmental announced its annual general meeting and key resolutions. United States labor figures suggest continued strength, even as Bridgewater hedge fund warns that President Trump's policies, particularly tariffs, present exceptional risks to US assets. Governance standards are also reportedly eroding, with political risks rising due to attacks on the Federal Reserve. The U.S. views its China tariffs as unsustainable, contributing to market volatility. Hopes for a de-escalation in US-China trade. Tensions have sparked market rallies, though these gains often prove temporary as a lasting trade deal remains uncertain. The U.S. endorsement of the IMF and World Bank has been met with positive reactions. In response to consumer anxiety, Nestle and its competitors are moderating price increases in the U.S. U.S.-China trade relations continue to exert a powerful influence globally. The U.S. position that China tariffs are unsustainable is driving fluctuations in stock, dollar, and gold values. The potential for high US tariffs could dramatically affect Boeing, Chinese airliners, and the development of China's domestic jet industry, with full domestic sourcing for China-made planes deemed unlikely before 2035. Australia's stock market is closely tracking developments in the US-China trade dynamic. The ASX 200 has seen increases fueled by optimism surrounding US-China trade negotiations and the continuation of Powell's position. Gains in the Australian market are being driven by miners and banks, pushing it to a 4-week high, also due to US tariff de-escalation discussions. Russia has expressed its willingness to discuss a nuclear agreement with the United States, as stated by Shoigu. Vietnam has commenced trade negotiations with the U.S., potentially coinciding with an aircraft purchase agreement. Gulf markets are mostly experiencing gains, driven by oil prices, corporate earnings, and optimism surrounding potential progress in US-China trade talks. India's stock market saw a volatile period, marked by initial dips, with the Sensex dropping 315 points and the Nifty 50 losing 82 points, followed by a surge of 500 points that propelled the Nifty above 24,300, largely due to gains in the tech sector. Overall, Indian stocks have rallied about 10% since early April, amidst trade tensions between the United States and China. Technical indicators initially turned bullish during a 7-day rally, although later, benchmarks showed a muted performance. The India VIX increased by 5%. Despite expectations of a higher opening, driven by hopes of eased trade tensions and increased foreign portfolio investment, FPI flows, the Sensex also experienced declines, once falling over 100 points. The NSE, National Stock Exchange, has tightened rules for small firms transitioning to the main board, while an Indian IPO attracted $39 billion in bids. Economically, India imposed a 12% safeguard duty on flat steel imports from China and Vietnam to protect domestic prices. Despite potentially limited macroeconomic impacts from Trump's tariffs, India's exports are heavily reliant on high-value sectors. Several companies are expanding in India, including Databricks, which plans to hire hundreds for AI development, and Stellantis, targeting India for EV development with its China partner. Geopolitical tensions with Pakistan, particularly following an attack in Kashmir and subsequent diplomatic retaliation, have impacted market sentiment. A previously stalled India-Saudi refinery deal is now back in consideration. Following an attack in Kashmir, Pakistan's stock market in Karachi experienced a significant plunge following missile tests by India and subsequent diplomatic measures. South Korea's economy contracted in the first quarter, showing a 0.2% decline. This is the first contraction in 4 years. Construction activity fell sharply by 12.4% year-on-year. Exports also weakened, impacted by the trade war. The Bank of Korea also reported a 0.2% GDP shrinkage for the first quarter. South Korean banks are working together to launch a one stablecoin, aiming for Korean tether. Data protection authorities accused Chinese AI startup DeepSeek of transferring user data to China and the U.S. without consent. Trade talks with the U.S. are underway. Tariffs on Chinese batteries are creating opportunities for South Korean battery manufacturers. The Daegu office market is growing, with declining office vacancies, while retail vacancies are increasing. Japan's stock market is surging, with the Nikkei 225 aiming to surpass the 35,000-point resistance level. The Tokyo Stock Exchange is encouraging listed companies to lower investment thresholds, aiming to attract more retail investors. Tech and auto sectors are key drivers amid easing trade war anxieties. Criminal elements, however, have manipulated penny stocks via compromised Japanese online trading accounts, illegally gaining about $710 million. Amid rising yields, Japan's largest life insurer is set to decrease its holdings of sovereign bonds, aligning with foreign investors' expectations of increasing super-long bond yields. Conversely, Japanese investors have recently become net buyers of overseas bonds. Nintendo faces massive demand for the Switch 2 in Japan, evidenced by 2.2 million lottery applications. Regarding international relations, Japan will resist U.S. attempts to create a trade bloc targeting China. Bangladesh and Japan are partnering to enhance trade and investment via B2B meetings, while Belluna celebrates 10 years of investment in Sri Lanka. Conversely, Moscow has criticized Japan's loan to Ukraine using frozen Russian assets, calling it treacherous. Japan System Techniques has posted robust Q3 financial results. United Kingdom. The UK is investing £300 million to boost its offshore wind supply chain, showcasing its focus on renewable energy. Child safety rules are being implemented that will likely challenge X's age verification procedures. The Bank of England cautioned that a potential trade war initiated by Trump could harm UK economic growth. Financial markets initially dipped but showed some recovery, particularly in the banking sector, after apparent policy shifts from the US. Tariff concerns and mixed corporate earnings reports have also caused market volatility. The UK is also reportedly tightening regulations on a Chinese tax loophole, influenced by pressure from the US. Key stocks under observation include ASOS, Unilever, and Hikma. Russia-Ukraine. Despite previous suggestions of Russia's willingness to negotiate a peace settlement with Ukraine, President Trump has called on Vladimir Putin to halt strikes on Kyiv. Moscow has asserted that its military objectives have been met following a series of strikes throughout Ukraine. Crimea's strategic significance makes it a central point of discussion in ongoing peace negotiations. United States. President Trump urged Vladimir Putin to cease Russian strikes on Kyiv, a day after expressing his belief that Russia was open to a peace agreement with Ukraine. The U.S. holds different perspectives on energy policy compared to the UK. It was also reported that the UK is cracking down on a Chinese tax loophole amid pressure from Trump. The Bank of England has warned that Trump's trade war will negatively impact UK growth. Switzerland. The USD-JPY and USD-CHF exchange rates have increased for the second consecutive day, with market dynamics providing support to the Swiss National Bank, SNB. European markets are facing volatility due to ongoing trade uncertainties. Potential tariffs and stalled trade negotiations involving the U.S. are key factors. European officials warned tariffs would harm all parties. They emphasize the need for a trade agreement with the U.S. president. This uncertainty has stalled relief rallies. European stocks are generally trending downward. Market sentiment remains somber. Mixed corporate earnings reports also influence investors. Kering, the Gucci owner, saw its shares fall. This contributed to the downward pressure. There were brief periods of optimism. Easing U.S.-China trade tensions and positive earnings from SAP temporarily boosted shares. Overall, caution and concern prevail. European semis are responding to market shockwaves. Hedging demand has doubled recently. The dollar has weakened amid these uncertainties. Saudi Arabia is witnessing robust economic diversification and expansion across multiple sectors. The upcoming Future Hospitality Summit in 2025 underscores the country's burgeoning hospitality market, forecasted to exceed USD 109.6 billion by 2033, with a 9.5% CAGR. The dairy market is also projected to reach USD 8.4 billion by 2033, exhibiting a 3.8% CAGR, while the buy now pay later services market anticipates a 22.4% CAGR through 2033. Yamama Cement reported a 23.5% increase in net profits for Q25. Technological advancement is a cornerstone of Saudi Arabia's growth strategy, exemplified by the significant expansion of its AI-based cybersecurity market, catalyzing a regional tech revolution. Major PC manufacturers, including Lenovo, HP, and Dell, are reportedly contemplating establishing manufacturing facilities in Saudi Arabia, potentially to circumvent US tariffs. Airbus is investing 2.5 billion rials within Saudi Arabia to ensure a stable supply of aircraft metals. Saudi Arabia is actively pursuing international collaborations and strategic investments. The nation is partnering with India on the development of 2 oil refineries. A Saudi alternative asset manager is expanding its reach into the Australian private credit market, while the Saudi ticketing application, Webbook, is planning a European expansion. The chairman of Saudi Arabia's General Entertainment Authority has forged a multi-year partnership with TKO Group and Sella in the boxing arena. In concert with Qatar, Saudi Arabia has agreed to settle Syria's $15 debt to the World Bank, facilitating reconstruction efforts. The firefighting chemicals market within Saudi Arabia is projected to reach USD 34.4 million by 2033, demonstrating a 3.3% CAGR. South Africa's government has scrapped a planned VAT increase after opposition from coalition allies, preventing possible government instability. Inflation in the country has dropped to its lowest point in 5 years. The central bank had noted that decreasing oil prices are helping to ease CPI. The rand has strengthened since the VAT decision was announced, and markets are looking for more budget information. An economist suggests that VAT increases can boost tax revenue without unfairly burdening low-income individuals. The VAT plan had been revised before this complete withdrawal. Pakistan is facing increased turmoil with India, resulting in considerable economic and diplomatic consequences. After a terror attack in Pahalgam, India suspended the Indus Waters Treaty. This suspension caused the Karachi 100 index to drop by 1,500 points and the overall stock market to decline by 2%. Investor worries regarding the rising tensions have further contributed to a slump in Pakistan's stocks and dollar bond. As a response, Pakistan has suspended the 1972 Simla Agreement. The country has also expelled Indian diplomats and halted trade. Furthermore, Pakistan has closed its airspace to Indian airlines. Amid these challenges, Pakistan's finance chief recognized Saudi Arabia's assistance in securing an IMF deal. He also extended an invitation to his Saudi counterpart for a visit. Despite these geopolitical pressures, a federal minister stated that Pakistan does not want to choose between China and the U.S. Both countries are considered crucial and strategic allies. Norway's sovereign wealth fund, managing $1.70 trillion, reported a substantial first-quarter loss of 415 billion kroner, equivalent to $40 billion. This marks the fund's largest loss in 6 quarters. The decline is largely due to decreased valuations in its technology sector investments. The Asian stock markets are experiencing volatility, with performance varying across the region. Uncertainty surrounds former President Donald Trump's tariff policies and potential negotiations with China. Wall Street's rally was not fully reflected in Asian markets, highlighting vulnerabilities. Trump's shifting policies have caused instability. Some Asian markets rebounded more strongly than the U.S. after initial shocks linked to Trump's announcements. Several Asian firms, including Metaplanet and HK Asia, are increasing their investments in Bitcoin. Germany anticipates economic stagnation in 2025, projecting 0 GDP growth. This is largely attributed to tariffs and trade threats stemming from potential policies under President Trump. Concerns are mounting that these tariff risks could undermine the fragile improvement recently observed in German business sentiment. Taiwan's financial landscape saw its stock market dip by 0.82%, largely influenced by a downturn among technology stocks. Yuanta Funds has announced a stock split regarding Taiwan's inaugural ETF. The government is maintaining mortgage interest as a deductible expense. To address international trade challenges, Taiwan has offered an additional $10 in assistance aimed at softening the blow from US tariffs. Meanwhile, Taiwan Semiconductor Manufacturing Company, TSMC, is slated to commence production using its cutting-edge A14 fabrication technology by 2028. Expanding its global partnerships, Optimus Partners has joined forces with AVIX of Taiwan to produce high-tech drone parts within India. In the United States, doubt has been cast on the efficacy of President Trump's tariffs as a means of compelling companies to relocate manufacturing facilities within the country. Meanwhile, a United States-based company is broadening its operational scope and preparing for a listing on the Johannesburg Stock Exchange, JC, signaling international economic activity. Turning to the United Kingdom, the British government is taking steps to shield its businesses from the potential fallout of increased tariffs. A key measure involves a firm stance against allowing the import of hormone-treated beef from the United States as part of any forthcoming trade agreement, prioritizing domestic agricultural standards and consumer concerns. Brazil is currently grappling with a significant corruption scandal. Federal police are investigating a scheme that allegedly diverted over 6 billion rei from the National Social Security Institute's pension payments. This investigation aims to uncover the full extent of the fraud and bring those responsible to justice. France's President Emmanuel Macron recently concluded a 2-day visit to Madagascar, marking the first visit by a French leader in 20 years. Macron emphasized strengthening cooperation on education and environmental protection. He also addressed concerns about France's colonial past. In Madagascar, Macron highlighted new initiatives focusing on sustainable development. These initiatives aim to combat climate change and promote biodiversity. Discussions also centered on improving access to education and healthcare for Malagasy citizens. Macron reaffirmed France's commitment to supporting Madagascar's economic growth and stability. Global economic uncertainty casts a shadow over the car market, raising questions about the potential of electric vehicle sales to bolster Europe's automotive sector. Meanwhile, investors are seeking safe havens amid tariff-related anxieties. Singapore's high-yield stocks are attracting capital as a result. Hong Kong has emerged as a prominent hub for digital assets. The city is now ranked as the second most crypto-friendly in the world, surpassing both Singapore and Abu Dhabi in this regard. Indonesia's Finance Minister Sri Mulyani Indrawati announced plans to reduce or eliminate the country's trade surplus with the U.S. Meanwhile, in Mexico, inflation unexpectedly increased even as Banxico cut rates. Shifting to Albania, Jared Kushner proposed significant luxury tourism projects, including a new airport along the Adriatic coast in an area rich in biodiversity. Kazakhstan is weighing the formation of a carbon market, even as its non-compliance with OPEC's agreements raises concerns about a potential price war with Saudi Arabia. In Thailand, a Thailand-Korea forum charted a course for collaboration across sectors like finance and defense, spotlighting the Ignite Forum. Moving to Poland, banks are reportedly loosening, lending to coal-dependent power groups after a period of constrained credit. Kuwait is contemplating an additional $4 billion investment in Egypt. The Philippines successfully raised $530 billion through bond issuances, reflecting strong investor confidence. Finally, in the United States, oil company executives are tempering their expectations of higher profits under President Trump, citing growing anxieties about a potential recession. And that's a wrap for today's news, because even headlines need a nap. Stay curious, stay kind, and let the noise fade as you find your quiet. Take care, stay awesome, and I'll see you next time on WHAM Today.